What's up, guys? We're going to go over this week's weekly watch list going into next week. First thing, take a look at what's going on next week in terms of news, economic data. Um, we have Powell speaking at noon on Monday. We have core retail sales at 8:30 on Tuesday. We have unemployment claims on Thursday, and then some Fed speakers kind of throughout the week. So those are kind of our high impact events coming up this week. So we'll keep an eye on those. So mainly Monday afternoon, um, Tuesday, and Thursday morning. So retail sales and unemployment claims are usually pretty big. We had Fed Chair Powell speaking a lot last week. Might be a little different in terms of impact. Usually, if he spoke last week and now he's speaking again this upcoming week, it wouldn't be that big a deal, like how much has really changed. But the core CPI came out, which obviously the market liked. So that might be some bullishness into that, but I think a lot of it's priced in at this point. So now let's kind of get into the charts. So, one moment. Okay, so when we're taking a look at the indexes here, well, first we'll take a look at the internals. So, first thing you can see here, the put call ratio is continuing to drop below zero point 0.7. Anytime that has happened, it's been pretty questionable in terms of, I mean, we typically see a reversal pretty quickly. You can see the past two times we've seen a reversal pretty quickly, and that leads to a reversal in the market. So we have to be very aware of that, that at some point we could be topping here and putting in a top for a few weeks, maybe a few months. So we just have to be aware of that stuff. So that's the first thing. Then we're kind of working along the different key market internals and first bonds. So you can see we're trading below that ATR trailing stop, but you can see here lower time frames are looking pretty solid. So we're in positive scores for all the time frames in the bull bear score besides that weekly and monthly. So if we can get back above that trailing stop, I think that could do us a lot of good. And then so we'll kind of dive into that a little more. So let's go look at the put call, or sorry, the bonds. So we've got a daily squeeze slingshot. Uh, we're looking at this. We've got some pretty good strength in terms of strength in the short term. And it's starting to pick up on the longer term as well. So we go the weekly. Still looks pretty rough. We're below the trailing stop. I think that if we can get above the trailing stop here, we can get above the trailing stop on the weekly. Um, I think that gives us a pretty good indication the low may be in for interest rates. And I think that could really support the markets for sure. So we're looking at these lower time frames. We're above the trailing stop. You can see how gappy it is, especially just because it's traded around the world so frequently. It's kind of like gold in terms of the gaps it gives overnight. But key points we want to pay attention to is you can see we've got this daily squeeze. We're starting to slingshot. If we get above that trailing stop, I think that's kind of a buy trigger for a continued push to the upside. We can hop back into these other internals here. So we've got the dollar breaking below its trailing stop. We've got a squeeze. It's fired to the downside. You can see negative readings here, and these typically act inverse to each other. So you can kind of see how that works, right? So the scores are negative on the lower time frames for the dollar. The scores are positive for bonds. and this is an inverse chart. So if the T-bond futures are going up, ZB is going up. That means rates are going down, which is kind of weird how they do that, but it is what it is. And so you can see the inverse relationship we have here. Then we have the VIX chopping around, consolidating, not really doing much, but you can see here all negative scores across the board. We have we're showing weakness and we're showing weakness. So you can kind of see we've got multiple different ways to look at this. So here's our strength scores, right? Um, we're showing weakness across the board here. In the dollar, we're showing some strength in bonds, and we are showing weakness in the S&P. Now, here's a big warning sign. We are above the trailing stop. Okay, so when that happens, that's typically a pretty good warning sign. So you can see here, last time we broke above the trailing stop, we popped up multiple times. Here, same thing, broke above the trailing stop, had a nice push up, broke above the trailing stop, had a nice push up. So that kind of this kind of coincides with this idea here. So maybe we end up rejecting here. Maybe we end up finding a bottom at the support here. Um, Maybe we get a little off track with equities like the S&P and start kind of moving at it, moving differently in the VIX kind of gives us that pop, which can kind of fix this put call ratio. So when we're looking at this, the reason why I say this ATR trailing stop, this is the only red flag we have between all of these charts, right? So we have the put call ratio and the ATR trailing stop on the VIX. Those are the only two red flags making us think that the market might go down. But if we look at all these reasons why it might continue up, dollars dropping, negative scores on the lower time frames, we've got relative weakness, we've got uh, ZB going up. We have strength on the lower time frames, and then the VIX is all negative scores. So the only thing is we're below that trailing stop. Now let's take a look at here's some prior examples of what can happen when we get above that trailing stop. So you can see traded below, broke above it, traded above it, traded sideways, boom, had a nice move up on AMD. Tesla. Anybody remember this move? So here's an example. Downtrend, 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 broke the trailing stop, and then boom, nice move up. Okay. Um, there's plenty of examples. INTC. So this can often act as a bottoming pattern when we break this ATR trailing stop. So I know a lot of you guys that took the mentorship or took the course, you now have access to this as of Friday. This is an extremely helpful tool. And so it'll help you be able to stay on the right side of the markets. I avoid shorting when we are above the trailing stop. And you can see with good reason, you tried to short here, you got smoked. And then it made the move after it broke the trailing stop. And then vice versa here, below or we broke above the trailing stop. You were trying to short it here, you got smoked, and boom. Okay. So now let's continue through. Take a look at some of the key names here, and then I'll give you a couple pointers with other stocks. So here we're taking a look at the different charts. So right now, 15-minute has a -1. Rest of the chart is strong. We have strength on the relative strength scores. We're at close to a 70, which is extremely strong. Um, but we can kind of look for uh, what's next, right? So, I mean, if we look at some of these different time frames, you can kind of see 15-minute broke below its trailing stop. 30-minute did too. 1 hour is still intact, which means probably the rest of these time frames are intact. So that 15 minutes below the trailing stop. So we got to pay attention to that. We can see here that we broke below here, traded back up on Friday, and then broke back below again. Okay, so let's see if this ends up resulting in a deeper correction. You can see pretty often we get a few days of downside when we break that 15-minute trailing stop. So um, that's also something that we have to pay attention to. So 30 minutes. Uh, this is just the beginning of warning sign, right? We're losing momentum on the squeeze. Same thing here, losing momentum. So we are at 3 ATR, close to it. 2.5 ATR is this level right here. And we are actually rejecting it at this point. So we may see a reversion to the mean. Probably a perfect spot to bounce would be right at this level here. Why? Because the trailing stop is right there. This is a clear support level. It's 55 or 550. So all there's a lot of things that line up with, okay, maybe we might go revisit this level here and hold. So that's kind of a key level to watch into next week. Right now we're rejecting at 50.60. So keep an eye on that. Now that we've got this news priced in, a lot of people have the idea priced in that we're going to have rate cuts. So maybe that's now priced in and we might see a little bit of a correction with the CPI confirming it. You can see here, NASDAQ is already kind of showing that a little bit. We got that 4090 level, but we've kind of got support here, similar level to SPY. We look at these timeframes here. If we compare the two, we've got sevens across the board from the 60-minute to the weekly out of 10. And then from the 60-minute to the 240, so the 4 hour, we actually have 1113. So you can see the NASDAQ is the weaker index right now. Tech is having a little more of a pullback. I mean, that makes sense as it had a pretty strong run and led the market, right? So we can see the short-term strength score is 61. And then for the S&P, the strength is 70. So we got a little bit more strength in that name here. So the overall market's showing a little more strength. I think a big reason that because of that is the Dow. So the Dow did break out, um, made a new all-time high on Friday. We had buy signals. These blue candles indicate that we had buy signals on multiple time frames. And then you can kind of see the rest was history. We traded, held 21 EMA, popped up, and boom, made a huge move up. So yeah, that's the Dow stocks are more heavily weighted in the S&P than they are the QQQ. So it's usually if the Nasdaq is heavily tech weighted, S&P is tech weighted but a little more spread out, and then the Dow is pretty spread out, right? So if you've been with me any length of time, you know how the weightings work with that and why SPY is dictated by the Nasdaq and the Dow, and that's kind of why, and a little more influence comes from the Nasdaq, and you can see uh, why we had the move we had on Friday, right? So, um, going through, so tech, this is XLK sector, similar story. Actually, this is a bit weaker, to be honest. So you can see based on these scores, um, it's slightly weaker. This is a 60. We got a 61, just slightly weaker. So, um, not much on in terms of signals on this one either. So, Nvidia, this is something that's interesting that is setting up for a move one way or the other. So we're just gonna have to be aware and see which way it decides to move, right? So, you can see here we had a nice pop earlier this week. Um, move from like 125 up into 136. So that's a pretty hefty move in terms of percentage in a week. But we had a clear rejection right off that ATR trailing stop. So that's acting as key resistance here. So we got to pay attention to that. Um, right now, we're looking at strength. We're weaker than the Qs. We're weaker than XOK. So we might want to lean a little away from this name for now. You can kind of see the lower time frames are holding up. pretty neutral, but we've got the 4 hour, which is pretty strong. I think the only thing missing is a squeeze to get us to the upside. So, but a key spot we have to break is pull that momentum back up and also get us through that trailing stop, which can help us make a move back into 140. Microsoft, pull back to the 21 EMA. This one has been strong for some while for a while. We've been trading it to the upside. We caught this move up to 260, right? Um, but now we're starting to pull back. You can see here short-term strength. It's dipped below 50. It's not. You can see the lower time frames are weak, and so that kind of gives us a clear view here of this is what a correction looks like. The lower time frames deteriorate. The uh, higher time frames become a little more neutral and remain bullish because we are in an uptrend. But and then you can see the short-term strength has kind of turned red as a result of this correction. So right now, this is one you're going to want to stay away from till we kind of turn around. Apple. So this one, you can see the strength in Apple, right? If we take a look at this, go look at, oops, there we go. Okay, so you can see here the past 5 days relative strength is a 68, 10-day, 70, 21-day, 70. We've seen some clear strength in Apple in the past few days and weeks. I mean, for a while now. It's not just something that's recent, right? So we've had some really great strength. I think this is helping prop up XLK, helping prop up SPY. Um, so this is like if we're looking to get long something, Apple is probably the way we want to go. You can see here the 15 minutes neutral, but we've got 975, 9999 versus you look at Microsoft, we've got negative scores here, a red score here, and we're 49 versus a 70. So we've got really good strength in Apple, and you can see here it was a clear outperformer on Monday up, or sorry, Friday up almost double the market. Then from there, Amazon, same story as uh, Microsoft. We're seeing weakness in this name. So I mean, that's really it for that. There's nothing really more to say. You can see the lower time frames are negative. We're showing weakness. There's so right now this isn't like in the short term, not one that you want to buy. The total relative strength longer term, a 56 and a 51 versus the overall market is a 70 and 66. So and so this one even is considered weaker than uh Microsoft. So continuing through here, Google, same thing. Popped up to 2.5 ATR, dropped back down. Now we're trying to pull back to that 21 EMA, and you can see negative scores on the lower time frames. This one actually is stronger than Amazon, stronger than Microsoft. So that's something to pay attention to. So, I mean, but it's not like an Apple, right? The two names that you want to pay attention to into this week are, um, like in terms of long trades, SPY, Apple, and AMD. Those are the top strength names going into this week. We go to Meta. You can see this one, daily squeeze, stopped right at that trailing ATR stop. Okay. Huge move down. This is a pretty strong failed breakout, right? We had this strong move up, sucked buyers in, and just tanked. So we got a 15-minute sell signal, 8 out of 10 on the score, and you can see all the way up to the 4 hour we are negative. So that 15-minute sell signal, it's already at its target. So I wouldn't be shorting it down here. I'd wait on a bounce, but um, this one actually looks the worst out of anything we've looked at so far. Then continuing through Tesla, strong name, same Same thing here. This is one we want to pay attention to. This is one that we may want to continue to try to trade to the long side, especially into earnings. So this one has strength. It's kind of up there like Apple. It's not far behind Apple. So this one is also a good looking name. Clear outperformer on Friday as well. Doesn't look as good. You can see these scores between the 30 minute and 60 minute versus Apple. Everything looks excellent. Excellent. Netflix. I think this is actually the worst one on my board. In terms of like the core stocks, this is the worst one. And then Meta is second. Um, and you can see why. It's pretty obvious. We've got negative scores from the 15 minute to the 4 hour, and we have um, a very red score here of a 32. We've got a 41 here. So we are not looking good. We broke below the trailing stop. This one looks pretty rough going into earnings. Obviously, earnings can do anything, but in terms of how the chart looks right now, it looks pretty bad. ABGO, this one's going to split on Monday. So, not I usually this tends to sell off, or stocks usually tend to sell off um after they have a split. So that's something we want to pay attention to as well. And then from there, basically what we're looking for is, okay, how are we going to trade after the split? We need to get above this ATR trailing stop. It's kind of like, why would I trade NVIDIA when it's rejecting the trailing stop? Why would I trade ABGO when it's tried to break above it 1, 2, 3, 4, 5 days in a row? I just don't see why I would want to trade these over a name like Apple, over a name like Tesla. So you can see the strength is there. AVGO scoring better than Microsoft, better than Amazon, better than Meta, better than Netflix, but we've got better looking charts, right? 15-minute sell signal. Can take a look at that. Hit the target. We're kind of in some chop. So this one, let's just wait to see what it does after. Lastly, for the core stocks, we have AMD. We had a buy signal, popped to the upside, slammed right into two and a half ATR. You can see here this strength scores. You can see we've got a 68, 69 score on the short term, and 63 total score. And then the lower time frames, you can see the 15 minutes came down a little bit, but everything else seems to be intact. So basically, Apple is the only thing holding up the market here. And if you're looking to trade some stocks to the long side, the um, places you're going to want to look are the strength, which is um, AMD, Apple, and SPY. The names you're going to want to stay away from are Meta, Netflix. Uh, yeah, I would say so. Basically, communications. So we said um, Google looks pretty good here, but with these other key names in the communication sector, I don't see a reason that I would want to do that. Trade that sector. So I'd kind of stay away from Google until these ones can start to pick up. Another one. So just recapping pretty much the ones that I'd be paying attention to: SPY, uh, Apple, Tesla, and AMD. Those are the strength stocks. And if you want to short something, wait for the QQQ. I wouldn't try and short individual stocks. It's just not worth it. Okay, now last couple ones that I want to give you that are oddball names, but they are setting up pretty nicely. A longer term pick for me, You can see here for XLP, if I clear this off, you can see here we had this, we've been trading in this range. We dropped, cleared the liquidity that had stops here, came up, now we're flagging. We've got good strength. We've got a clean board. We've got a monthly buy signal. And we don't, once we get past this resistance, we can see this target here and then the 2.5 ATR target up here. So I think that this sector has potential to run here soon. We just need to break out of this bull flag and start to get a movement to that all-time high. Another one that I'm watching is WMB. This has a very clean chart. We've got earnings coming up, so maybe we'll see a run up into earnings. You can see we have relative strength on this name. We have all positive scores. This is an extremely bullish scoreboard. We've got 8, 9, 9, 8, 10, 8, 7, 7 on all these different time frames from the 15-minute to the monthly. So we've got strength on all these time frames. We've got a 120-minute buy signal, so a 2-hour. We've got a 4-hour buy signal. We've got a daily buy signal. And then on top of that, this is in the XLE sector. And XLE, though it does look not the best, we've got a 15-minute, or sorry, a 30-minute buy signals. We've got 15-minute buy signals going into the close with a nice kind of push towards the upside. So I think that if we have any sort of move up with that close above the 21 EMA, we could see a push up. And XLE, I would not trade this because it doesn't look good on the higher time frames, but WMB does look very solid in terms of its trend, in terms of how it's been trading, and just how this chart looks overall. So those are kind of my picks going into this week. XLP, WMB, and then you want to, for the real stocks, like I say real stocks, like the mega cap stocks that you want to pay attention to, you want to be watching SPY, Apple, Tesla, and AMD. And then you want to stick away from Netflix, Meta, and really Amazon as well. So, but all right, guys, hope this helps. Thank you guys for watching, and I'll see you for the markets on Monday.